Talk about a company, Canadian, obviously, in terms of its roots, but you do about half your business in the U.S., obviously your natural gas pipeline, you kind of your crown jewel here. Talk a little bit about whether you've seen any impact at all from the increase that we've seen in oil prices, and more importantly, the disruptions that we've seen in LNG, oil, and other things coming out of the Middle East.
Well, we move about 30% of the natural gas across all of North America, Canada, the U.S., and Mexico, and to all coasts of the continent for LNG export. So when you see the type of disruption we've had in the Middle East, it certainly reminds everyone of the importance of energy security, and buyers are looking to continue to diversify their sources of supply. So obviously infrastructure takes many years to develop, but you have to start sometime, and looking for various delivery paths to different markets around the world. North America looks interesting and attractive, and whether it's in Canada or in the U.S. Gulf Coast, or even on the west coast of Mexico, there are competitive advantages, particularly for delivery to Asia from North America.
I am curious if we are going to see a material shift or a material increase in infrastructure build out. There's been a lot of people trying to make comparisons to what we saw in COVID with supply chains, and how that kind of forced a lot of companies and governments, for that matter, to sort of rethink exactly how those supply chains work. Is this event, what we're going through right now, particularly if it is prolonged, can that be that same catalyst for a relook at energy infrastructure?
Definitely, not only from the perspective of LNG exports, but natural gas for power generation to meet data center demand. So there's an impetus for significant increased investment in natural gas pipeline infrastructure and in power generation infrastructure to meet quite significant growing energy demand in North America. That's going to need streamlined permitting to attract the capital that's required to actually grow the American economy.
You mentioned data center demand. They're actually really huge, giant energy users. How much of that is actually translating today into new pipeline capacity that you're seeing?
Well, we have sanctioned a number of projects. We have $8 billion of projects committed today to the U.S. marketplace. And the majority of those have a data center component to them. There's a lot of just general electrification that's being added as well. If we look at the projects that are on the drawing board right now, where we are talking to developers about, we could add another $8 billion of sanctioned projects here in the next 12 to 18 months, where data centers are the ultimate customer for a significant portion of that investment.
So what then are the most immediate or biggest bottlenecks you're seeing? Is it permits, pipes, connections to power?
Well, on permitting, it's simply we need things to move faster. It's challenging right now, given the permitting timelines, for infrastructure to be built quickly enough to keep up with the demand growth. On the power generation side, I would say that it's more challenging on the supply chain side. Power generation turbines are long lead items that require many years for delivery, and that has slowed down some of the development work that we've done on the pipeline side, simply because it's the gating item. But again, the global market is responding to that. We're seeing turbine manufacturers invest capital in new manufacturing capabilities, and I have never seen the pace of investment opportunities for us grow as quickly as it's been growing over the last 12 months.
Have you run into any issues, given some of the political conflicts between the leaders of the U.S. and Canada, in being able to see these projects, or even just sort of, even to really plan out these projects, given how long-term they would have to be?
Well, if anything, energy has been exempt from some of the trade tensions between Canada, the U.S., and Mexico. And I think it's a recognition by all three governments of the importance of the free flow of energy across borders to support the reliability, energy reliability of each of the three countries. There's an explicit exemption provided you meet rules of origin for under the USMCA agreement for energy flows across the borders. In fact, more energy flows back and forth across the U.S.-Canada border than any other border in the world. And we would expect, I can't predict how the USMCA will evolve or unfold over the next few months, but we would expect, given the energy literacy of all three governments, that the free flow of energy will continue, irrespective of what happens.
So you haven't had to rethink any potential investment plans or anything like that as a result of it?
No.
Has there been any discussion about things other than natural gas? I know you do have some nuclear capabilities in terms of other types of power, particularly for servicing some of these data centers and other AI build-outs.
Very much so. In the province of Ontario, where we own approximately half of the largest operating nuclear plant in the world, we are in the early stages of planning a significant expansion of that facility, partly to meet electrification growth, and data center demand growth is part of the equation there as well. Those, of course, take many years, if not a decade or more, to develop and put into service. But those plans are accelerating as well.
30 seconds here. When it comes to LNG, is Canada in a position today to step in as a supplier, or is infrastructure still a constraint?
Canada has the resources, has the know-how, and I firmly believe that Canada can become the largest exporter of LNG to Asia, given the resource and given the focus of the Canadian government on diversifying beyond the U.S. economy. There's a huge opportunity for Canada.